What's up, team? So today I'm going to jump right on in. This is the week 11 update for the 100K options challenge. Had to make some decisions this week on some things to help propel this because we're obviously hitting some weird things here with how bad the market's been this year thus far. So I took some actions to get out of that. We'll take some profit in the process. I'm going to explain that in just a second. First and foremost, this is not financial advice. I'm not your financial advisor. I don't know your financial situation, and no one else who does these things does know it. The other reason why I want to pump this out a little bit sooner than I have been in the past is there has been a huge increase in the amount of videos I've seen on YouTube around making a living, retiring on, early retirement on the options wheel strategy. The option wheel strategy, which is essentially what I'm doing is selling puts to get premium, and then if you get assigned, selling calls to get premium. Listen, this doesn't work long term unless you have massive amounts of capital, okay? Like huge amounts of capital. The way I'm doing it is a way that's manageable. I'm generating real revenue with it, but it is not easy. It takes time to understand what your big plan is. You have to have capital reserves to cover yourself, etc. So I know I say this a lot during these videos. Seriously, it's good to learn these things. It's good to have it in your pocket as a tool. But if someone's telling you that this is an easier strategy than dividends because the returns are better, well, the losses are there too. So keep that in mind, that if you make a bad call, you sell a put and it ends up crashing and you end up owning a stock worth half of what you are paid for it, that's really hard to have in your portfolio. And trying to write calls against something that's going to represent a huge loss means now you're going to have to work very hard and for a long time to get back just to even before you're even turning a profit again. That's why I'm saying, like, approach everything with caution. Make sure you have a strong backing from a capital perspective. And let's jump on in. So I'm going to share my screen here. Excuse me. So this is going to be pretty quick because there's not a lot to talk about. So on the last one, I gave an update for a couple of weeks, a couple of periods of no trades. I'm not fooling around with this front. Like, if I don't see things that look good or there's nothing that I feel is compelling, I'm just not making a move just for the sake of doing it, okay? So I just want to call that out. The week of March 7th, I never felt good about where the market was going. I didn't feel comfortable making a trade, so I didn't. That's what happens when you do this in a professional way. You have to manage your trades, manage why you're making them. Now, that said, I started seeing some turnaround in economic data. Things were starting to stabilize overseas with the Russian-Ukraine situation. It's not that things are better. They're actually very terrible at the making of this video. However, at this point, I think that the markets have largely priced it in. We're starting to get stability in and around the commodities market, which was a key driver for me to get a feel for what's happening in the U.S. markets here. And here's what I did, basically. The week kicked off March 14th. I made a trade on Tuesday and then again on Wednesday. And here's what I did. I had been watching TQQQ, which is a leveraged QQQ ETF, really not meant to be held long-term. I've explained in a previous video, I'm working on building out an algo for trading to look for optimized correlation between a long and short position here. Not even close to being done with that, for the record, but just want to call that out. So what's happened is I've been selling TQQQ for a while. I've been assigned a few hundred shares of it. And at this price tag, sitting on about $25,000, $26,000 worth in my portfolio. And because I'm sitting on that money, I'm not able to use that capital to sell more puts. So what I saw, though, in true form, I saw that the price was sitting around $42.96. And again, I apologize for the coughing. My allergies get terrible this time of the year. The price was sitting around $42.96. And the signs in the market were that we were looking at a minimum stabilization, or best case scenario, I started looking at some of the data points that were changing, some movements in other core stocks as well. And I just had this weird feel from doing this for so long that we were going to see a quick bounce. Now, keep in mind, a bounce doesn't mean I'm expecting to get back to where it was an all-time high or something like that. But it was just priced too low, and the premium represented the fact that something was wrong here. So I want to show you what I did. So on the 15th, I went in, checked on some pricing, and what I noticed was, again, now these are way, way beyond what I normally would trade from a deviation perspective, right? It was trading at $42.96, just about $43, right? And the strikes at the $50 call for the following Friday, because I trade intra-weekly typically, was paying out $710 per contract. So if you think about it like this, that was about $7.10 a piece. So right off the bat from the 50, I'm getting a price of $42.90. okay, give or take, right? So I'm getting at 42.90. They're running at 42.96 today. So worst case scenario, I get assigned at right around that current price by the end of the week. I can just sell for break even and be fine, or sell calls on them, no problem. Now, speaking of selling calls, I had been sitting on 500 shares of TQQQ from an earlier assignment, and because of what was happening in the market, I was finally getting some better covered call rates. So what I saw here was at a 51 strike for 5 contracts, and this was actually, ironically, here's actually how the week was going. I'll give you a quick feel for it. On Tuesday, TQQQ was at 42.96 when I grabbed the $710 premium. The very next day, this thing went right up again, up to 46.97. Now, I had been averaged in to this position at just over 50 bucks. So I want to say like 50 and 10 or 15 cents, give or take. So I saw an opportunity to grab a quick $115 in premium. And then additionally, I made about 90 bucks, 90 cents or so per share. So give or take about another 450 bucks in profit on the position. But again, I'm not counting profit on positions for the sake of this exercise, but I do want to call that out that like I was far above my break even to a point where I was profiting both on the execution and on the premium. Now, full stop here. This is super, super, super important. If I had just held them, I'm going to actually check the price right now because I want to make sure I give you a real key. Sorry, I want to give you an actual like true case of why calls can be so risky. So right now it's a Sunday. TQQ ended up closing at 53.51. So I would have actually made quite a bit more money had I just held them. But that's not the point of what this exercise is. This exercise is actually to show some of the flaws in this system. So perfect example, had I held them, I would have made quite a bit more money, almost $1,000 more here, or maybe $500 more or so here. But like, you get my point. There is opportunities no matter how you cut this thing. So long story short, that's what happened. I made 2 trades, and what I was able to do is actually get these 500 shares off my books, take the profit from the put, which didn't get assigned, obviously expired worthless. I got the 710. So here's what it looked like. For the week 11, I ended up doing 826. I obviously did 0 the week before. And for this first quarter that I'm tracking here, week 1 through 12, I'm currently sitting at 4,228 income against a goal of 4,325. So, excuse me, my gut feel is that next week I surely will be able to make my bones here. I have some other assigned positions that I'm looking to write covered calls against. So I have basically no doubt on what I'm going to do here, but I do think there's some frothy puts that I'm looking to sell. I haven't quite researched where I want to put it just yet, but Tesla is making me feel like that's one I'm going to be looking at. And again, like, I'm not suggesting you do this. I'm just saying that when you start to get a feel for which direction the market's deciding to move in and what degree of downside I can find, that will represent how much premium I can likely grab here based on my convictions that I'm going in behind this. Now, I want to call something out too. On a previous comment on the previous video, I actually had some great interactions with a commenter who was saying, like, I should share more of my strategy, how I'm positioning, what kind of Greeks I'm using, all that stuff. Sometimes I do go really heavy on the math behind this. Sometimes I go with what I quickly perceive in the market as being an opportunity. A week like this, I had 2 goals. I want to dump shares in a profitable way off of my books, and I want to see if there was an arbitrage opportunity between what I perceived as being a positive momentum movement in the market to where the price was at the time of trade. So those are cases where I'm using discretion. Discretion is a very dangerous word in the world of trading and investing because discretion leads to decision-making, and decision-making can be very wrong. The right way to really do this, if you're going to do it for, let's say, a living as an example, should really be systematic. Building a program, building the math in and around what you're trading, why you're trading, the parameters for it, when trades execute and when they don't. In my real portfolios where I do the bulk of my work, I do take things from a systematic approach. But the true form of what this exercise is to show that all the talk and balking and how much money I make and the Lambos I'm buying and the jets and the private vacations that you hear about, it's not that easy. You have to have mountains of capital and constantly be looking to restructure and pull that in. Because as you can see here, I'm going to share this actually one more time. because I think this really says the point here. When people say things to you like, hey, sell some puts and make a bunch of money on premium, okay, sure. What happens when you get assigned? Well, then all of a sudden you're sitting on 5 lots of TQQ as an example that just knocked 25K out of your possibility to leverage as capital to sell covered puts. And that's a problem, because if you don't have the capital to back that up, you're going to be stuck in a position where maybe the best you get is selling 115 bucks on those 5 lots. And if this doesn't execute, then I made 115 bucks for the week, right? If that's all I had to work with. That is not retirement money. That's not enough to live on. There's no stretch of reality where that's going to work. And that's with 25K up against it. So I just really, for the point of bringing caution here, more than anything, ask yourself a question. If this is all someone is doing to generate a living and income, how much money are they doing it with? And is this even the best strategy then from a risk perspective, right? Anyways, thanks so much for watching. I do expect to have some trades the following week. So next weekend, I'll have some good updates here. And I also want to call out, I'm kicking off a new show with another YouTuber over at OG Cyberfam. So we're going to be doing sort of this dads who look at finance and tech and have some good conversations, some fun conversations as well on some of the things we're working on. And we're calling it the Fathers of Finance, sort of as a little bit of a joke, because we both talk about finance and tech, but we're also happen to be dads. So this is going to be a really fun, really relaxed show. If you have questions, you have thoughts, you want to share, feel free to ping us the questions, or see if you want to come on the show. We'd love to talk to you too and have some guests on. So with that, I hope you have a great week ahead. Be safe. Always consider the risk of what you're doing against the value of what you're getting for that risk. So with that, thanks everybody for watching. Otherwise, have a great week. Good to see you again. Thanks so much.